Hi, everyone. Welcome to The Edge. Today, I'm going to be discussing the 2026 budget. The 2026 budget is the largest in Nigeria's history, 58 trillion in spending, 24 trillion deficit, and almost half of government revenue is going to be going to debt servicing. Okay. So today, the idea is not to react emotionally about the budget, but to break down the numbers and tell what the numbers talk to us about growth, risk, execution, and what Nigerians should be looking forward to in the year ahead. Now, talking about the 2026 budget, the 2026 budget is the largest in history. It's about 11 times larger than the 2015 budget in Naira terms, and about 1.5 to 1.6 times larger than the 2015 budget in dollar terms. Now, the budget deficit is expected to be about 24 trillion. So how is government going to fund this gap? Government is planning to fund this gap using domestic and foreign borrowing. So they're going to be borrowing money locally and internationally. Locally, they're going to be borrowing money through bonds and treasury bills. Now, this has implication for private sector organizations looking to raise funds. This has implication for crowding out the domestic companies that are looking to come into the market to actually raise funds. So here we estimate an elevated level of interest rates going into 2026 because of the amounts that government is going to borrow come 2026. Now let's break this further down. The debt service is expected to go up about 15.5 trillion. Revenue is projected to be about 34.3 trillion. So looking at that alone, debt service is projected to be about 45% of the total revenue. And what does this mean? It means that nearly 1 naira of every 2 naira earned will go to debt servicing. So this is currently, or this is going to be more than the IMF comfort threshold of 30%. Okay. So Nigeria is going to spend almost half of its revenue servicing debt before schools, road, and hospitals. So this is going to be significant. Now, let's talk about the capital versus recurrent spending ratio. The capital spending or the capital expenditure projected in 2026 budget is about 26.08 trillion. The recurrent non-debt expenditure is projected about 15.25 trillion. So if you do the math, this is going to be about 63% of the primary spending. Now, why does this matter? Now, the amount devoted to capital expenditure in the 2026 budget signals a shift towards growth-oriented spending. Historically, Nigeria had leaned heavily towards recurring costs. So the 2026 budget is more investment heavy than past cycles, at least on paper. Okay, because we're going to talk more about the implementation, which is going to be key. Now, let's talk about the budget deficit now. The budget deficit is about 24 trillion. Here's where it gets interesting. Nigeria's population is about 227 million. So if you do the math, it means that every Nigerian will owe about 105,000 of the budget deficit. Okay. So every Nigerian implicitly will now carries about 100,000 of the 2026 budget deficit. So that's how much you owe or your part of the 2026 budget deficit. Now, the largest allocation goes to defense and security, which is about 5.4 trillion. Education and health are expected to go up about 6 trillion. So security alone is about 90% of education and health combined. This is worrisome, okay? This is worrisome. It actually signals that security remains a single dominant priority of the government. And it's understandable why this should be the case. So Nigeria is going to spend as much on security as on education and health combined. Okay. Now, talking about the budget assumptions, government is projecting that oil price would be around 64.85 barrels, okay, per barrel, and crude oil production about 1.48 million barrels per day. That's the assumption. Hopefully, these assumptions hold, but let's look at the reality check. So each 100,000 barrels per day shortfall will lead to an approximate 2.4 billion annual revenue loss. And if there is any shock to oil prices, let's say there's a drop by $5, this will materially widen the deficit. So every $1 price miss matters more when deficit is this large. Now, continuing on the assumptions, let's talk about the FX rate now. The FX rate is budgeted at about $1,500 to the $1,400 1,400 naira to $1. It's currently close to the 2025 budget levels, unlike previous budgets where we had this wide gap between the exchange, the official exchange rate, and the parallel market. Now, why does this matter? So with the exchange rate put at about 1,400 naira to $1, it reduces the implicit FX subsidy risk and also suggests a more realistic fiscal spending. Now, so that's why this is a more realistic exchange rate assumption than what we've seen in the past. Now, the government is projecting that real growth, which is the growth in GDP, is projected about 4.68, and that the population is going to grow about 2.6. So if you do the difference there, look for the difference that's about per capita growth of about 2%, which is significant because previously the population had been growing higher than the GDP growth rate. So this is really going to be significant if we are able to strike the 4.68 GDP forecasted by the government. Now, the capital spending efficiency, I talked about it is not the size or devoted to capital expenditure, but actually the implementation. So this budget is projecting about 26.08 trillion in capital expenditure. But historically, the implementation rate, that's the best, has been about 60 to 70%. So if you look at that, it means that the effective capital spend may actually be closer to somewhere around 16 to 18 trillion, not the 26 trillion that is being projected, because it is not so much about the budget size, it's actually about the implementation, the execution, right? So budget deficit is projected at 24 trillion. If you look at that, that's about 4.2% of the GDP. And this means that Nigeria's Fiscal Responsibility Act, the budget deficit is currently going to be above Nigeria's Fiscal Responsibility Act. Well, if you also consider that it's not currently at a crisis level, but it's not also at a consolidation level either. So these are some of the metrics or the numbers if you look at the 2026 budget. I hope you enjoyed this breakdown and analysis. Thank you for watching, and please consider sharing send in your comments, and would appreciate if you subscribe to this channel. Thank you.